Hi everybody, Brian here from quantlabs.net. Just wanted to talk about three important events that have triggered a bit of activity on my Facebook stuff. So three articles I posted in one, which these are bullish signs of a kind of a new capitalism of defining what new capital flow works. Obviously, this year has been very pivotal in a lot of ways with the sudden rise of Bitcoin and other cryptocurrencies. As a result, there's other areas that have not been getting a lot of attention. One of them are ETFs. So there has been a sudden rise of capital flow here on FT Financial Times. Exchange traded fund inflows on course to surpass 600 billion in 2017. So as an example now, the largest asset managers on the planet are in the order of BlackRock, Vanguard, State Street, and then Fidelity. And those are all due because of their growth in ETFs. And now ETFs is pretty well taken over. Even institutional money is going into this asset class. And it's a good way to measure inflow as a new sort of way on market direction. So I've been going on about that on my Instagram via the Bloomberg News app consumption. So this just verifies all that, and the total amount is pretty high at 600 billion, and that's something we should all really pay attention to. The other one is as I said, Bitcoin and other cryptocurrencies. When you get future markets like CME, CBOE get in on the act by issuing future contracts around these asset classes, and from what I've been told by my highly influential Telegram group member, basically they are using the exchanges in the cryptocurrency exchanges, the trustful ones. They're using them as the underlying data for the direction on the futures contract. Obviously, they'll be totally not linked financially back to the exchanges. They are, as I said, derivative products. I should say derivative. And these future contracts will definitely impact the flow of cryptocurrencies on the performance uh, of those current cryptocurrencies on the exchanges. As you know, they are linked, but financially they won't be, as far as I know. So that's what I'm saying here. Now this is really important because if I had, let's say, $1 million, I would not put $1 million into these products. As I said, they're derivatives, and a lot of people say derivatives are obviously even buckets of dangerous weapons, financial weapons, and that's truth because there's really nothing backing them up except because they're virtual currency. And again, they're just gonna be tracking the performance on these cryptocurrencies, and I've also posted which exchanges those will be on in past articles, and yeah, just do a search for them on my blog. Oh, one other thing that's really important about back to ETFs is, as I said, ETFs is a way to measure capital flow, but does not mean that futures and options markets are losing significance. But well, I should say they're losing significance in terms of flow because like a new competitor to the futures and options market. So ETFs is definitely, I would consider a competitor to them. But as I said earlier about ETFs, you can use them as the capital flow as a way to measure market direction on whatever assets you're watching. On top of that, does not change the fact that the futures contracts, forward contracts are important, as well as options, chains, specifically open interest, are pretty important for market direction because all of these uh, are forward looking. So it's just an important way to confirm your market theories. Now, another important story on, I think for next year, will be energy. So here we have energy ETFs triggering a bullish signal. This came out a few days ago on the 1st. So I'll post the article link at my blog post, which is right here. And the title of it, of course, is Bullish Signs Define New Capitalism of New Capital Flow. So do a search for that on my blog. All right, so then you'll be able to find the links. Hopefully this will somewhat help you out later.